So hello everyone, and we'll be looking at what happened this week. It's Saturday. We're doing a recap of what happened in Nasdaq and in the S&P, and also I'll be posting backtesting videos of the dollar index and the Dow. So be ready for that too. So the trend is still bullish. I mean the bias is still bullish. The order blocks haven't been validated yet. This gap was partially refilled, so I don't need to see a return to that. So the bias this week was bullish, and but then I'll take you to Monday where there was this gap formed. If I show the annotations, can't see it, but this gap right here, there was a gap right there. I hope you can see it. It was traded into, and I'm expecting price to bounce off that and target the previous day's highs, considering all these previous days lows have been taken. And let me take you to the 1 hour time frame, starting from Monday. So on Monday there was this fair value gap. You'll have to watch ICT so that you can understand what I'm talking about, because I'm not teaching it. He's the one who's going to teach it properly. On Monday there was this fair value gap that was formed, and price consolidated a lot, and then this fair value gap was attacked on Thursday, and that was the major move. Of course, there's a lot of hands which I'm going to take you into it right now. We'll go to the 15-minute. I'm using a top. So we said you were bullish, the bias that is. I hope you can see through my annotations. It's not even a lot. God damn, my mouse is running out of charge. So 8:30, we had the 8:30. We marked the buy side liquidity. That was it. Sell side liquidity. Sell side was taken. After sell side was taken, we anticipated buy side liquidity being targeted. There was a fair value gap in lower time frames, and by 12 we had already taken out majority of the buy side, and it continued to rally all the way up. So I participated in this trade, but since I got out of 12, I didn't catch this whole move, and I didn't participate either. And after you win, learn to stay out. So there was this break below it, but remember the bias is bullish. So ICT trades, yeah, we can't take a trade against the bias, but why would you want to? It's high risk. Then it's Tuesday, anticipating what the buy side liquidity being taken. This is the buy side liquidity. Buy stops are resting above there, and sell side liquidity before 8:30 would be this, but it wasn't targeted. So the buy side was taken, the swing high is broken, fair value gap traded into. The risk should be just below that candle right there, or 5 pips below it. Consider this is the S&P, and your trade would have been all the way till 12, and whatever you caught, even if the target hasn't been hit, you take that and you just get out. And that is if you were targeting this buy side, it was taken anyway at 2, but there was no clear setup in the 15-minute time frame. Then on Wednesday, opening price 9:30, there was no news, so nothing really much happened. It was just back and forth all the way, and the buy side was taken overnight. And at this point, what we're targeting is the resting liquidity, and that gap I already showed you. So at 9:30, 8:30, annotate the buy side. That's the buy side. There was no stop hunt, but that doesn't mean you still can't enter a trade. And at 8:30, let me just annotate that this is Thursday. I'm sorry I'm moving quick, but I need to go through the Nasdaq too. There was that fair value gap in lower time frames. There was also this after 9:30. You want to be trading after 9:30. It was traded into perfectly, targeting what? What did it leave right here? Relative equal lows. There was resting liquidity here, resting liquidity there, and also these two lows. Check it, zoom in. It left them perfectly, traded there, and I was part of this, but then I got around 12 too, because you don't want to be there till between 12. And it went and took everything, my exact target at 1:30, but I didn't participate in it. It's proof of concept, but then I didn't participate in it. I know it feels bad that I wasn't there and my target was hit, but then again it might as well have went and reversed. So following ICT concepts, don't trade during the noon. So that's 2 trades I lost, but I'm okay with that. That's 2 trades I didn't achieve my desired target because it happened after the time I'm not supposed to be there, and I don't regret it. Okay, so Friday 8:30, relative equal highs. Stop run on the sell side liquidity. Just know that the sell side liquidity resting right here. I have to annotate them. The sell side liquidity resting here. So it was taken at 9:45. You probably want to be trading after 9:30, preferably then 10 to 12. That's high confirmation. So this swing high was broken, a fair value gap was traded into, and the highs were taken, and that was it. I can go back to the 5 minutes just to show you the exact setups. Okay, so Monday, there's the sell side taken, there's the fair value gap, that's the fair value gap, trades into it, and the rallies all the way to 12. So where's your setup? I mean, the trade I took was that I was out by 12, so I caught 14 and my risk was 6. Then Tuesday 8:30 sell side, not completely taken, but considering these were the targets, these relative equal highs, you see them. In fact, they didn't even give you a chance. At 9:30 the news took them out. Fair value gap, that was a fair value gap. Would have had to weather this risk. If you kept your stop loss here, you'd have probably gotten taken out. So make sure to place it at the last high of the upward move. Respects the order block, doesn't respect the candles. The candles respect the order block, and at 11 it rallies off. That was another trade, but I don't like the risk parameters of that trade. Then we have 9:30. Nothing much happened. It was just back and forth. All the way till 6. I mean, if you saw a setup there, you might as well just pop out and tell us. Then here is Thursday. There's the first fair value gap I was talking about. It was present in the 3 minute. I won't go back there, just go into charts. And then at 10, you see that perfect setup. Swing low broken, trades into the fair value gap, gives you 1, 2, 3, 4 entries, goes lower, and also provides you, also gives you a setup here. I hate using the tab, but my mouse is running out of power. I'll have to recharge it. There's also that clean, and then it went and took this, it rebalanced that fair value gap that I had showed. This one, it's a retracement to that gap. Obviously I would have preferred if it had gone all the way 50%, but it eventually did on Friday. And on Friday it is the relative equal highs. There's the 9:30 candle. Relative equal highs were left, sell side was taken. There's a stop hunt, a raid on sell stops, and everyone who had trailed their stop loss going up, thinking that the buy side liquidity would be taken. And after that, you're hunting for a setup. So this was the setup. We just remove it. See that the swing high broken, but it was in the 3 minute. It was in the 3 minute, but there's also this one here at 11, and the scalp would have been all the way till 12 on Friday. I didn't see a trade in the afternoon, and you would have got 12 with your risk being, in fact, I think 5 is just great. 5. I'll do another one on the S&P just in a minute. So that was it for this week.